Be like you, walk like you, talk like you. Oh, coffee down. Gonna go back to basics today, guys. Roll the intro. Tell you a little bit about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. And trust me, I am a scruff because I'm not exactly Brad Pitt, am I? I'm not exactly Steven Spielberg either, but I do try. But what I am trying to do is put trading in the real world and give a little bit of a snapshot of what I do for a living and my strange look at the world. Because apparently I do have a strange way of looking at the world. But we're all different, and that's what makes the world fantastic. And what I'm doing today is going back to basics. But it's based on some of the comments from a rant that I did at the weekend. And the rant was me getting a few things off my chest. But it also gives me a good talking point about the emotional side of trading. And you see, trading does attract the crazies looking for quick, easy money. They'll never put the work in and they'll never succeed, and they will always have a forearm like Popeye.
You ding dong!
Sorry, I get wrong off my wife for that one, but sorry. And when you're looking at emotional states, as I did in that video, you look at certain personality traits and one thing and another. A lot of guys reached out and really lifted me up because I was proper annoyed at the weekend. And they sent out some great, wonderful emails. There's some fantastic comments underneath the video. And it did lift me up, because I genuinely believe there's more good in this world than there is bad. The only problem with this world is you only seem to remember the bad. I'm trying to change that. That's why I shout out a lot of people who help. So a special shout out to Phil Meekins. Superb support message, etc. from the Facebook group and donation at the coffee fund. It really is heartfelt. Fred Archer, he always comments and tries to lift me up. Spoke with him many times. And my little friend across the pond in New Durham, of all places, Peter from Longwood Currency Trading. You know, the old man of the woods, as I would call him, because he's clocking on a bit. But he likes a coffee and a wine, so he's a good boy in my book. Anyway, as I was reading through the comments, came one across Chris. Now, Chris has been in the Facebook group a long time. Touched base with him many times, and he said he hadn't been active because he was on a losing streak. Well, I want to do something for you, Chris, and that's the basis of this video. We all go through losing streaks. It's nothing to be ashamed of and nothing to hide away from. In fact, embrace it. And talk to the others in the group, or if you're feeling a little bit down out of it, you've got my direct details. Just drop me a message and I'll tell you a dirty joke and lift your spirits up.
Matron, take them away. Oh.
You know, because that's what trading community is about. It's not about trading tips and sort of, oh, are you going long? Are you going short? All of that. It's about trading your own way, in your own style, but having a support group around you that can help you stand up when you fall. You see, in life, we all get knocked down constantly, you know, and it's not the knocking down that makes us, it's the standing up, and it's the ability to stand up when you've been knocked down. I have been battered senseless throughout my life. I have not only mental scars but physical scars. But I always stand up and I'll think, I'll step forward. Knock me down, I'll stand up and I'll step forward. You know, watch the Avengers, Captain America. I can do this all day. So can I. And that's about your personality and your mental capacity. The moment you think you have failed, you have. And that is something in trading that can eat you alive. So don't do it on your own. You know, talk to people that are around you, whether it's your better half, your mum, your dad, your best friend in the pub. Talk. And always just take the good from what they say. And then tomorrow you can look at the charts a little bit clearer because your mind is a little bit more calmer. But if you go into it because you're downtrodden, you'll have a tendency to overtrade because you're trying to get back the loss that you've had. And that's where the emotion game comes in. What is gone is gone. Worry about the things you can change, not the things you can't. If you've lost, you've lost. Don't worry about it. Forget it. But you can change the outcome of the next trade. And you can do that by going back to basics. Because sometimes that's what you need to do. And it doesn't matter what aspect of life. If you go back to the basic elements and rebuild it, you'll find it rebuilds a lot stronger. So that's what I'm going to do today. I'm going to jump onto the screen and I'm just going to go through basics. A basic moving average and support and resistance. Just to clean it back up again. Start again. And I kind of hope that makes sense. I'm really not trying to talk it down or anything like that. The whole idea is I was quite touched by all the comments, and because I've spoken to Krish on a number of occasions and I saw his comment, it touched me on a nerve level, and I just felt I needed to lift his spirits, and that's the idea of this. So please join me in lifting him up. Drop your comments below and let him know that the world is not this horrible place and his losing streak won't last forever. Let's jump on the charts and have a clean sheet. Okay guys, so let's pull ourselves up a little chart and we'll get ourselves back to basics. Oh, talking of back to basics.
There you go.
Hello my love. Is this for me?
It is, but he who must have coffee.
The hero must have coffee, because we all know Scruffy likes his coffee, especially in Star Wars mug. Talking of Star Wars, boy,
Hey!
you're going to put that gold bikini on this weekend.
I don't have a gold bikini. Sorry.
Does that mean you're going back to basics? That could go one of two ways this weekend. Let you lot figure that out.
Hello.
Sorry. You've got to wind the winker up all the time. It's my favourite thing in the world is wind and wink you up. Well, that and I'll give you a little guess as to something else. But anyway, putting that aside, let's talk basics. Now, when you open up a chart for the first time and you're looking at an intraday, you more often than not, you'll take your bias from an hourly chart, as in front of us right now. And it doesn't matter which chart it is. It can be cable, euro, dollar, don't matter. All right. It's just a movement of price. And that's as basic as it gets, you know. And I think some people overcomplicate things, and they also try and mystify to make themselves a little bit better. Trading is very simple, all right? all you are doing is looking at a figure on a morning, which is 0, and your job is to make certain that 0 is higher come the end of the day. That's your job. That is it. All right. And when you're looking at a screen, you then take it to another step. Well, I know I have to go 0 up. What's happening with this? Well, this can only go 3 ways. It'll either go up, down, or sideways. So you're narrowing and boxing everything down. Okay. And I know you scratch your head and go, I'm not rightly following this there, Langers. What are you rabbling on about? Basics is what I'm rabbling on about. Boiling everything down to its lowest common denominator. It's the first thing you do in maths. All right? So you now have this, and you have to make a bias. All right? Now, if you're doing it just with the chart on its own, you need to learn to read a chart. So you need to know how to pick a top and bottom. Well, there's a bottom, and there's a top. All right. So you can naturally assume if that's the bottom and that's the top, this thing is going to retrace, and you have to decide how far it's going to retrace. I work on a 50%. So from there to there, down 50%, happy days. How do I know that's a top and bottom? It's very simple. I can see a drive up. 1, 2, 3 hours of selling. Huge tails to the top. Pushing down, but it can't get any further. Look to the left. There was the last time it got down there. It can't do it. Look further to the left. There's your clues. That's your candle telling you there's a direction change. Simple. All right. Now, to me, that is basics. But to somebody who's never read a chart before, wouldn't see that. They wouldn't understand what the makeup of that is. And then when it's racing up to the top, I then also can say strong, 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 strong. I know a market can't move indefinitely in one direction. Massive push down. It hasn't got anywhere near the 50%, so I know that move ain't over. Pushed up, couldn't get any further. Massive push down, which tells me that the sellers are overcoming the buyers. Push, 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 but it's a tail, indecision candle, another engulfing. That tells me the market is going down. All right. That is just a quick snapshot of basic chart reading just by looking at a snapshot of information. Okay. But when you're new, you haven't had enough time around the markets to understand what you're looking at and to quickly identify it. So you need something to help you. And the first indicator that you can use is the first indicator that was ever invented. This is way before RSI, stochastics, CCI, MACD, before any of them. It's a moving average. And a moving average is your best friend and worst enemy at the same time. It's your best friend if you know how to use it, and it's your worst enemy if you don't. All right? But first of all, before we go through all of this, we'll have a quick snapshot of what a moving average is. So if I pull up a basic moving average, there it is there. At this moment in time, if that's all you're trading with, you can use that. It's very simple. It's a cross of the moving average. If the price breaks it, stays above twice, 1, 2, you go long. And vice versa if it goes short. That's as simple as it gets. All right? But what is it? What is a moving average? Well, there are 3 primary moving averages. You have this one that is on at the moment, and it is literally the number of candles divided by itself to give an average. So in this case, 50. So it'll count back 50 candles, divide it, and it gives you your average. Simple stuff. You then have an EMA, an exponential moving average. If I pop that on, so there we go. So there's your EMA. Calculated roughly the same, 50 candles back, divided, blah, blah, blah. But there's a little bit extra weighting to the last 20%. And that's why it reacts to the price that little bit quicker. Okay. And the last part of the trilogy is a volume weighted moving average. This one here. Same calculations, except this time it takes into account volume and money flow for each of the candles. And does it really matter which one of the three that you use? Not really. You know, some like a VWAP, some like a standard, some like an EMA. As long as you understand what it is and you're comfortable with it, don't matter. Okay. So what I'm going to do is I'm going to strip off these two and just leave the EMA, just simply because it's the most popular one. And we're going to have a little bit of a look at it and see if you can build up some form of a trading makeup, but using that moving average. See, as I said earlier on, you can have it as a cross where price crosses there, you enter, price comes here, you go short. That's simple as it gets. But you want the edge on your side a little bit more. Now, the next part of the puzzle, again, is as simple as it gets. And it's areas of support and resistance. You know, what I would call an area of interest. So I'll quickly draw some in and I'll show you what I mean. So there you go. Down, bounce. Clearly see one up the top there, the size it got. Okay. Another one there. See it. It's there. Respect it around. Across here. Yeah, this is all just quick stuff, guys. See, it's respected there, there. Come down. It's definitely bounced here. What you're doing is you're building pictures up on a chart. And that's all you're ever doing. You can go bodies to tail, tail, bodies, whatever. You're just looking for good levels. All right. And that was done quickly. So you're now looking at that and you think, well, so I've got to do with the price of bread, Scruff. Now you have two pieces of a puzzle. All right. You have a moving average and you have areas of interest. And they're called areas of interest because you know something will happen at those levels for no other reason than it's happened before. History does repeat itself. And if you scroll this back, I just rattled them in, but sure enough, it's respected that level. There it is there, and there, and there, and there, and there, and there, there, down. See? Quick snapshot, guys. All right. So I know when they come into levels, something's going to happen. It's either going to try and burst through, but if there isn't enough strength, it's going to come back on itself. So how do you know which way it's going to move? Well, that's where your moving average comes in. All right. If you're doing intraday, you want somewhere in the middle. If you're using a 5 or an 8, it's too quick. You might as well just use the price. If you're using a 50, 89, 100, it's actually a bit on the slow side because by the time it's figured it out, the price is there. So you're only somewhere in the middle, 20 to 34. 20 is a commonly known moving average to watch. Reason being there's around 20 working days in a month, which is why people talk a lot about the 20-day moving average. And when you're doing intraday, 20 is pretty close to a full day, 24 hours in a day, 20. a bit of slack time. It's just a good psychological moving average. So how would you use it? Well, it's very simple. Use your moving average as your bias. If it's above, you're long, and you use your areas of interest as triggers. Easy. This is about as basic as it gets. So if we look at it from this side, okay, there's your moving average coming down. That's your first thing, pointing down steeply. The price is below it, and it has just broken your level. Easy to see. So you now know momentum is that way because that's bent down. The candle is telling you momentum is that way because it has just broken a key level, close. So you are good to put an order in to go to that level. Easy. All right. And likewise, and likewise. Do you take any of this? No, because it's on the wrong side of the moving average. Basic. The price is now broken the moving average. So you're now looking for long only. Are you taking it here? No, you're not. Because it's away from this trigger point. You're waiting for it to break this. There is your first break. Do you take that trade? Probably not. Why not? Because to the next level is only 3 pips or so. And if you've got a spread of 3 pips, you're going to get nothing. All right. So you wait. But the next zone from that level to that level is a decent way to go. So you see where the candle closes. There it is there. You are 1820 up to 1840. That is a 20 pip move. You can open your order with confidence and hold it to there. Easy. 20 pip target. Limited risk. Okay. At this area, so you might have closed out on this candle or certainly on this one. You have a choice. Take half your position off and see if the other half will run up to here. Awesome. If that closed you out altogether, you can re-enter again here. You reevaluate what's going on, pointing up, broken a key level, green, simple. Hold it to here, and you repeat the process over and over. There will get you up to here. Then the market slammed right down, and it opened up again. Okay, didn't quite get as far, but you can kind of see the principle. We're not all going to be winners, guys. This is basic of basic without any RSI, stochastics, or any other indicator. This is just pure basic stuff. All right. But if you hold it and you managed your risk, you'll find that this isn't too bad a profitable situation. It's just basic stuff, guys. And that's what you need to be doing as a trader. Keep it simple, but just build up little layers. It doesn't have to be overly complicated. I do this all the time, zone to zone. Should have been recording the DAX today because that's exactly what I've just done. There it is there. It's a good result. Where was I at? Give it a second. All I was doing is waiting for this to catch to get down to there. Simple as that. But I had it staged because it had a very, very long way to go. And I wanted to catch boom, 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 boom on the way down. And I do it consistently over and over every day. If I have a move that, like that zone there, there was well in excess of 150 pips or points because it was on an indices. From zone to zone, break it up. So you're scalping off little bits of money all the way and you're getting paid, but your primary target is there. If you're looking at a 20-point move, you're worth holding it out. Simple stuff. All right. So that was just a very quick overview of using a moving average with an area of support and resistance to try and fine tune your trades. And the reason, like I said at the beginning of this, was I read a comment, and sometimes just going back to basics is what you need. If you're having a losing streak, you're just having a losing streak. Every day the markets will change, and sometimes you just can't read it properly. But if you strip it down to its bare basics, start again, it's like a refresher, and then suddenly you can read it a bit better. Okay, and that's the whole idea of today's video. So I'll shout out Krish again. Keep trucking, son. You will get there. Good choice on the Facebook group today. Rick Astley. Can it go wrong with a bit of Rick? Well, she would disagree. We'll find out. We'll find out. You like Rick Astley? Never going to give you up.
When I was younger.
You are young? So what do you listen to?
Also.
What, all sorts? She listens to absolute crap. What do you?
No one's as much as yours.
Okay.
You listen to the worst music.
I listen to the worst music. Apparently, Cher is better than the Wurzels. I'll let you lot Google it and figure that one out. So I'm going to enjoy the coffee and sign off. Keep trucking, Chris. And remember the rest of you. Do what you love, and money will follow. I'll see you all in the next one.